Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 11th of March. We've got a lot of volatility that continues to play out through markets. The VIX continues to remain at massively eye-watering levels, actually above 50 on that VIX. We've seen mixed responses to how the US government is going to enact some sort of fiscal stimulus. It's uncertainty as to what Trump's plan is going to be with this. The US administration don't really know how they're going to be enacting this fiscal stimulus plan quite yet. So subsequently, the markets have taken it a little bit with uncertainty. There was a massive flying around actually on the S&P 500. It opened up quite strongly higher and then fell away as the rumours that the US government weren't ready to enact the plan, and then subsequently the US administration later on in the session briefed on the fact that they were going to be doing it. So subsequently the S&P 500 flew back higher again. But this volatility is not going to be helping a very fretful market, and we've seen that US futures are lower again today. With regards to Treasury yields, that fall away on Treasury yields has sort of hit the dollar again. The dollar had been looking to recover in the last session or so, but it's just fallen back again today, and it's actually trading weaker against all the Forex majors today. The key mover actually, in terms of aside from the Fed, aside from the dollar moves, is actually with sterling. Sterling has been sharply lower and then back higher again on this Bank of England emergency rate cut of 50 basis points. The press conference that Mark Carney subsequently gave suggested that the Bank of England did have room to further cut rates, but it would suggest also that I think that the Bank of England was saying that this is a really big package of measures that they've enacted here. So the market seems to have been taking it fairly positively, actually, in terms of cable. It's trading higher than it was before the announcement of the surprise rate cut. So given the fact that it was 50 basis points and markets had broadly been anticipating this move anyway, it's actually helped to arguably support sterling, and it comes on a day where you've also got the from the UK annual budget decision as well, which should theoretically, you'd imagine, contain a whole raft of stimulus measures on the fiscal side. So a bit of policy coordination there between the Bank of England and the UK government could suggest that the UK forces are sort of making their move to try and contain this coronavirus and put the relevant measures in place economically to help support the economy. So some decent gains we have seen on sterling, even though we've had this emergency rate cut. In terms of data points, today you've also just had out the UK data for GDP for January. Actually missed estimates slightly. Industrial production slightly lower than expected. Trade balance a bit better than expected with regards to a lower than expected trade deficit. But still, we've seen sterling, which is relatively positive today. In terms of other markets you're looking at, equities have flown around. FTSE was quite strongly higher initially off the back of that rate cut decision. It's now sort of starting to leak those gains away again. Oil price, has that started to roll over again? Interesting questions there with regards to that move. But broadly speaking, we're still very volatile in all these markets, and that is not really yet to be going away. So we're still seeing this volatility playing out. So regards to data points further today, we've got the US inflation at 12.30. It's expected to slightly fall away on the headline inflation. Headline inflation expected to drop to 2.2% from 2.5%, but core inflation staying the same at 2.3% in the US. Okay, so that takes me on to my chart of the day, which is the Kiwi dollar. Now, it was interesting that what we've seen is, huge amounts of volatility in recent days, actually. I mean, that just goes without saying pretty much, but look at that volatile session on Monday. Big sharp move lower yesterday has been countered by today's reaction higher. So certainly the Kiwi seems to be playing more volatility than most actually. Kiwi is actually the big outperformer of all the forex majors today, 0.8% higher against the dollar. But this rolling over of the rebound just worries me, considering it's at a downtrend. It's at the 21-day moving average. Comes in at 63.40. You've got these momentum indicators which, well, have basically rolled over really. That RSI failing around the 50 mark. MACD lines just edging higher really, as opposed to sort of decisively moving, and those stochastics have rolled over. So how this market reacts around the 63.30 to 63.60 resistance. Well, 63.30, I said that on the daily morning report, and that's pretty much to the pip where we've seen the market just come back from. 63.60 is a level as well. It's an old level of resistance pivot line area. So yeah, this resistance now where that those old highs start to come back in will be interesting, and this how the market responds to this rally this morning, given the fact we do have these medium-term trends lower in place with the 21-day falling, that trend line falling, momentum indicators negatively configured. So you'd still say that this chart is set up to sell into strength really, and sort of retesting the 62 figure level of support is still really where we're at. I think even though that we've rallied this morning, I think that how the market responds to this 62.80 line, which is again another pivot here, I think that how the market responds to that will be important now. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.